My next guest has some idiosyncratic ideas for how to play all of this turmoil. Julie Biel is Chief Market Strategist and Portfolio Manager at Kayne Rednick. Julie, we know the mega caps, that trade's not working so well right now. What is?
Yeah, I think if you can find businesses that are not really so fixated on a certain theme working in the macro, right? Much more about the individual fundamentals of these businesses. So, they can be unsexy companies in, let's say, insurance brokerage like a Ryan Specialty, or investor communications like a Broadridge Financial. These types of businesses, they have really durable protections around them, and they're not dependent on a specific Trump policy, a specific AI outlook. You want companies that just have built a really nice moat around them and are just quietly going about their business.
Or even going a step further, could the little firms that might benefit from all of this confusion and disruption? Descartes was our mystery chart. That's a name that doesn't come up a lot.
Yeah, absolutely. This is a Canadian company that has, over the very long term, built a huge global trading network. You can think of them almost as the Bloomberg terminal for doing your global trading. And that is multimodal, right? It's this network where you can both arrange the shipping that you need, but also advanced analytics to kind of help you figure out, okay, what's going to happen with the tariffs? What kind of customs clearance do I need to do? They really provide a lot of transparency and analytics and good data to help you make good decisions. And they have quite a strong position in that market. When there is this level of uncertainty and change, they tend to be beneficiaries. You may see some step back in actual shipping volumes that are pretty minor in the near term, but over the long term, more customers recognize, hey, this is really complicated. I would like a resource to help me navigate it.
And a lot of these are, positive over the past year or so, but what would you say for investors broadly who are just a little wary of getting into some of these small cap names? They'd rather stick with something big, maybe more, defensive or bigger cap, at least in this kind of environment, thinking, okay, they'll have the resources to kind of get through this.
Yeah, absolutely. There's a great case to be made for that. And I think that's really worked very well over the last decade, let's say. But I think that you can find a lot of the same qualities that you're looking for in large cap in small cap. You can find businesses that have no leverage. So they've actually weirdly been beneficiaries of higher interest rates because they have these large cash balances. Or you can find businesses that, have very few competitors. And so they're able to really be what defines their own destiny and kind of crystallizes that for themselves. So it's not a function of always of large cap, small cap. It's more a function of what's specific about this business that allows it to be really successful. And sometimes in small cap, you can find these names before a lot of investors have wised up to them.